The Honest Money podcast is brought to you by Prescient Investment Management. We consider everything to give you the advantage. It's the future of investing. Prescient Investment Management is an authorized FSP.
Welcome to Honest Money. I'm Warren Ingram and he's
Pieter Villiers from Money Marks.
Today we're talking about insurance, and please don't switch off. This is an important topic. I know it's a little bit dull sometimes, a little bit boring, but this is Honest Money. It won't be boring. We'll keep it entertaining and educational. So it's the thing I like least about our industry. I think we're both financial planners, and for me, it's one of those things that's absolutely necessary. It's core to building your whole financial position, and it could be the Russian roulette risk. If you try and go through life without insurance, and you get to age 80 and you've never had to claim for going to hospital, a car crash, disability or something like that, you would have been incredibly lucky. The likelihood is that you're going to need insurance somewhere in your life.
Yeah.
And so we're going to talk a little bit about it. And I think maybe just to categorize what we're talking about. We're talking about insurance for your stuff. So look at all this fancy equipment. So it would be whether you use equipment for your business, your car, to get you to work, to earn a living. We're talking about insurance for health. So if you go to hospital, and then also the two kinds of insurance, one around your ability to earn an income. So protecting your ability to earn an income. And then the last one, which would be the protection for your loved ones if you were a provider for them and you've died. So that's what we're on about today. And it's a difficult subject. It's a complicated, messy part of our industry.
Yeah, absolutely. And I think just the concept of why we take insurance is not because we've got too much money that we want to waste. And I think the general perception around insurance is it's a grudge. I have to pay for this and I don't want to. But we really want you to understand why it is important and why certain things need to be insured. So the way that I like to think about it is if something were to happen to you, so you're facing a risk, you need to fund that risk. Now, let's say you're still young, you just started working, you don't have funds built up to really just pay, replace a car in cash. If you get disabled, you can't work, you can project your income per month over 40 years. That's millions that you're losing out. You don't have millions in the bank to do that. So you may get to a point in life where you've got enough wealth that you self-insure yourself, where you can do all these things. You can replace your car cash, you can get disabled, doesn't matter, you've got enough money, which is great. Then you maybe not need insurance. But if you're still young, there's a risk that something might happen to you, and you transfer that risk to an insurance company, and in return for that risk that they insure, they will then ask you a premium. You will have to pay a premium for that, which is a lot less than the actual risk that you're being insured for. So that's a concept around insurance. So we want to make sure that we can continue living the same standard of life if any type of risk happens, because that's kind of like putting you in a position that you were before that risk. So it's not a grudge purchase. It is making sure that all of these potential risks, and I mean, there's millions of types of potential risks that can happen to us. There's no way you can ever insure everything, but there are some major things that could ruin you financially. If you have the best investment plan and everything is going well, something happens and there's a big health thing and you have to withdraw all your investments, you could kind of claw back many years and even decades of hard work just to cover your bills. So we want to make sure that we cover ourselves that. And people always think kind of risk or insurance is separate to investments, and it's not. Insurance comes first and then you invest, because you first need to protect what you have before you can build what you don't. Because there's no point in building a big investment portfolio if a risk event happens and you have to, obliterate that whole thing just to make sure that you can survive.
Yeah, I mean, I think there's so many easy examples. For example, you drive out of your office and you go home and you've got a very low priced car that you've bought cash, and you think, well, I don't need car insurance because I've got enough money saved up to buy another car if something goes wrong. So I'm not going to pay for insurance. Life is great, and I'm saving all this money, and everyone else is paying hundreds of rand a month to the insurance companies, and they're stupid. Well, that's fine. Again, if nothing happens, but what happens if you drive out of your office and you just through an accident drive into someone's 5 or 6 million rand car and you wipe them out. Just remember, what happens now is you caused the accident. So the fact that they've got insurance doesn't help you. What actually happens is you become liable for their car and for your car. And their insurance company might protect them in that instance, but they're still coming after you for the balance. And then, if it is a very expensive car, you've lost 4 or 5 million rand that you don't have. That can happen tomorrow. I mean, that can happen at any time. I'm not saying that, that's reckless driving. Accidents happen even to people that are responsible. I mean, I don't think I'm the world's greatest driver, but I am responsible and I could have an accident. And so, as your point there about transferring risk is real. When you don't have assets and you don't have the ability to pay for things with cash and lots of different scenarios, then buying some form of insurance to protect you in the early days is good. Equally, I think we both agree that as you build up assets and you get to the point where you get closer and closer to financial freedom, by all means, start to reduce some of the risks that you've transferred to the other companies, because you can take it on now. So, being able to insure your life, if you've got no financial dependence anymore, you don't necessarily, and you've got no debt or anything like that, there might not be a need for life assurance, or there might be a need for very small amount. And, if you've retired, you shouldn't have disability insurance. You shouldn't, it just shouldn't happen. I think there are lots of people that do. So there will be stages where you can cut down your costs. And even in short-term insurance, I think, there are ways to take on some of that risk as your financial position gets better. But surely in the early days, you don't have the capacity, pay the premium. And I know I'm smiling when you said it's not a grudge purchase. It's always felt like a grudge purchase to me. But I think you should say to yourself, I'm doing the clever thing here.
Yeah.
And maybe that's the point. Yeah, it's about being smart. It's not about, where you think in your budget, I'm going to save myself 2,000 rand a month on not paying insurance. I'm really clever. Actually, you're really dumb. That's really dumb.
Yeah, it's responsibility. It's being smart and responsible, because with investments, there's also the element of risk there that we've covered in previous episodes, where the markets can go up and down. But it's not as big as the risk that we could face in many different events. So not having insurance, you have to be very careful. And I mean, if you want to take that risk upon yourself, because that's sometimes also an option, if you feel like, the probability of something happening to me is small, I'm very cautious, it's always your own decision. But just be aware that if something happens, it could be financially devastating to you and your family, because it usually spills over to other people in your life. So I think let's start with the easiest one to understand for me, short-term insurance. So let's break it down. It's insuring possessions. So you've got a car, maybe you've got a cell phone, you've got a wedding ring. What short-term insurance means is you're transferring that risk of that item being destroyed, stolen, maybe your house burns down, and then being put in the same financial position you were before. Not better, but in the same position. That's kind of the concept around that type of insurance. So now it's easy to conceptualize. If you have a phone, you could insure it and pay, if it's an iPhone, probably $300 a month. Or you can say, listen, if my phone gets stolen, I'm okay with buying a second-hand phone cash and I'll be okay. But now if you're one of those cool kids and you want the newest, latest iPhone Pro 16 to the 1,000, maybe probably have to insure that thing, but it's going to cost you money, because they also determine the premium on what the likelihood of that type of item being stolen. So in cars, for example, you'll pay a lot more for a Toyota Fortuner or a Polo Vivo, because they get stolen much more often than you would have to pay for an old Honda.
Subaru.
Yeah. So there's a lot of factors that influences how much you will pay for the premium, and looking at everything you possess. So the kind of main things that I'd say is more important is, if you have a house, obviously the home building structure, if it burns down, you want to replace that. Stuff inside the house, household content. So if you pick up the house, you turn it upside down, you shake it, everything that drops, that's your household content. Car insurance, as Warren mentioned, your own car, but also third-party liability. If you drive into someone else, that's important. And then you kind of get to your all-risk section, which is items that you take out of the house. Phones, wedding rings, maybe cameras, stuff like that you're not comfortable replacing in cash. And then also personal liability, which is if maybe someone's at your house and you've got a big pit bull and he attacks them and bites off their leg, then you might be liable for their medical bills. And if you are in a specific profession, like a doctor or a vet or a lawyer, also need professional indemnity insurance. If something happens to a client or a patient and they want to sue you, you need cover to protect that, because that can also go into the millions. So it's that type of risk that we can physically see in front of us, and one that we need to insure.
Yeah, no, and maybe just to add one more, which is new in our lives, but I think is becoming bigger and bigger, and that's cybercrime insurance. When someone steals your identity and cleans you out or makes it difficult for you to kind of get back into society. And I think maybe let's just talk about the things that you can do to keep those costs down. And so one of the things I know with insurance is that those items that you spoke about, the all risks. So when you leave the house and you've got an expensive phone or a camera or jewelry, watches, etc., and you want all of those things insured, firstly you have to specify them. You have to keep proof that you've bought them. You can't just say to the insurance company, "No, I had it. It's been stolen now." You have to keep the receipts, actually keep the proof of purchase, and understand all of those things are more likely to be lost or to be stolen than if they're sitting in your house, etc. So that means they're much more expensive to insure. So for me, I think the moment you start building a bit of savings and start accumulating some extra capital, and you can even put it like an additional layer into your emergency fund, I would cut down those all risks items as much as possible and just make peace with the fact that you need to look after your stuff and replace it with your own cash if it goes. I don't like cell phone insurance for that reason, because I just think it's really expensive. And the same with I know a tricky one around wedding rings and jewelry and stuff, but some people really spend on those big items. But just understand those things are in demand in terms of being stolen. So if you wear a fancy watch and you're insured, great. Just understand you're paying a fortune for that. So you've paid a fortune for the watch, and then you're paying a fortune to insure the watch. So for me, I try and cut down those things. The other big one, I think, is around what they call excess. In other words, I have an insurance claim, and it's a legitimate insurance claim, and now the insurance company will say to me, okay, if the claim is worth 50,000 Rand, and this is agreed up front, this is not something that they tell you afterwards, but if the claim is 50,000 Rand, you are liable to pay the first 2,000 or 5,000 Rand of the claim. That first amount that you pay is called excess. Now, let's just understand the mechanics of that. What it means is what the insurance company is telling you is you need to share the risks with us. It's not good enough that you pay us a premium and then you just give us all the risk and you're reckless with your stuff. So the bigger the excess, in other words, the first Rand amount of the claim, the bigger that Rand amount is, the more risk you're willing to take. And that tells the insurance company something. So for me, as you build up financial capacity in your position, as you start to earn more and save more, I would make sure that you try and increase that excess, because then you're self-insuring already. And if you can get that to 50,000 or 100,000 Rand, the insurance company knows that you're not claiming for every little thing. And secondly, they know then that a claim is going to be a big claim, and they can reduce the number of times they're going to have to look after you in your lifetime. So I think that for me, that's a very big one. And then the one big mistake I see is people view an insurance policy as a bank. They think, I don't really like my phone anymore. I'm just going to, have an accident, and then they drop it or whatever, and then they claim for it. You might get the claim paid, but just know that's on your record now. That's it's almost like a credit record. That your claims history is going to count against you. If you claim a lot, at some point the insurance company could just say, look, from now on, the next claim we're not paying for another cell phone, or they're going to increase your premium and just make it very expensive for you to be insured. Or, and it happens quite a bit, they're just going to say, you're a bad risk. Going forward, you need to find another insurer. You've got 30 days or 60 days or whatever the law requires them, and they tell you to go. So for me, you want to pay insurance for the events that you can't foresee, that you can't plan, and then you claim as little as possible and do everything you can to minimize the costs of your insurance and only claim for the big events.
Exactly. Yeah, absolutely. And maybe one thing I can add to that is I oftentimes see people have like 3 different short-term insurance policies. One for the house, one for the cars, one for their cell phones. And what usually also helps if you consolidate to one provider and you keep everything under one policy, because then oftentimes you get a discount, and shop around. I mean, nothing stops you once a year to just get quotes from 3 different providers. It's very easy online these days to get comparative quotes and then make an informed decision. Usually it helps to tell your current insurer, hey, these other guys are offering me a discount, I'm considering leaving, and then they might actually renegotiate a better rate. So always revise that once a year, because your life also changes. Your car is a bit older, it's worth less. So just that, you might have items that you want to insure in addition, or you might have built up like a emergency fund that you can self-insure. So yes, try and be smart about it to reduce your cost, but not to the extent that you cancel it completely because you think you're invincible. That's exactly when something.
COVID taught us all of that.
Yes.
I mean, you could be sitting, with something that you've done nothing wrong, and life just happens. I love the idea of shopping around and then keeping your insurance company honest. The one thing I would suggest is when you do that, when you get a new quote, make sure that it's exactly the same insurance that you had before. So what I mean by that is, if you say to someone, well, I'm one insurance company, well, I'm paying 2,000 Rand a month with my current insurer, and they come back to you and they say, okay, you're now, we can insure you for 1,100. It's a huge difference. Just check that the conditions of insurance are the same, so that they're still insuring your car comprehensively and all that stuff, because it could be that they just take away some of the insurances and you don't realize, and then you get into trouble. So I mean, I like to keep insurance companies honest. So doing that quoting, if you get a good quote from a different insurer, nothing wrong with showing it to your current insurer and saying, how is it that you guys are insuring me at double the cost relative to this quote? What's the deal? And sometimes it's just that insurance companies try and buy new clients by charging lower premiums. In other words, it's nothing wrong. They just feel like they want to grow their base of clients, and so they might well then try and grow their business by offering competitive premiums. I saw one recently with an older lady, who's moved to the coast, and her insurance costs have halved by just shopping around and getting the exact same insurance. I mean, that for me is the power of shopping around. So I think your point is valid there.
Yeah. And it's apples with apples. And I personally feel like, and this is very much across the board, the financial industry makes things very complicated to understand. And it's difficult for normal people to just understand what is apples with apples, because, comprehensive, third party, what does that mean? So you have to also spend some time to read up and shop around. It is worth the effort if you can save a couple $100, but very important to make sure it's apples with apples. So I think then the next big risk is a health event. And that's something that we always think, or I used to think, when I'm older, I'll probably have a bigger risk of getting some disease.
You are getting older now.
Yes, I'm hitting the big 30 this year. It's horrible. But I mean, we see young people suffering from diseases like cancer and diabetes and heart attacks, even strokes, which I would assume it's for when you get older. But
you weren't pointing at me there, Pieter.
Just in a general direction. No, I'm kidding. But these events, if we look at the costs of these major medical expenses, it can run into the millions. If we think about COVID, if you were unfortunately diagnosed with a very severe strain and you had to end up in ICU, spend a couple of days there, it's hundreds of thousands of rands that it cost. Now, luckily, we do have subsidies with the government, and you can go to a public hospital that can help with that. But oftentimes, you need access to private healthcare, and having medical aid or hospital plan really helps to just cover those major medical expenses that could ruin you financially again. And then you kind of get the top ups to that. So I think it's important that we just distinguish between maybe a hospital plan and a medical aid. A hospital plan is just covering those major medical expenses when you are admitted to a hospital. And then medical aid is extra on top of that. So it's the day-to-day visits to the GP, it's going to the dentist, to the pharmacy, pille en brille, we call it in Afrikaans. So your glasses, your medication, it will have like a medical savings account that you can use for those things. Medical aid is more expensive than hospital plans, so it's also important that you understand your specific situation and what you need and your family need. You also have the option to start maybe with a cheaper hospital plan and have your own medical savings account, like emergency fund, for those medical expenses, and self-insure you to that extent. But I think if you can afford it, then having at least a hospital plan is very important for those major medical expenses.
Yeah, I mean, I think we live in a country with severely compromised government care, and so just it's not a luxury. I think if you can afford it, it's kind of after food and clothing and shelter. A hospital plan is key, and I like your point. I mean, I don't think you need the most comprehensive medical aid known to mankind. If you are young, you're in good health, and your family history is good, then getting just a decent quality hospital plan, so that if you are in an accident or something bad does happen and you end up in hospital, you're covered immediately. I mean, it's not a gift if you're 25 years old or 31 years old and you end up in hospital and your family have to now pick up the liability. That's no gift to them or to you. So I think just covering a hospital plan makes all the sense in the world. I think also understanding the role that age plays. So it is likely that you end up in some severe medical issue later in life, and so starting with a hospital plan when you're young and fit and the like is good. Considering upgrading your plans as you get older is a good idea, I think. Because I'm getting to that age now where things are going to happen, and I want to know that I'm insured. But also for people that are considering having children, it is phenomenally expensive to have kids. Not just the education and the housing and all the other stuff. Even from the moment the conception happens and you go to that first appointment with a specialist, that's expensive. And so upgrading medical plans, if you're planning to have children, makes a lot of sense, because a lot more of that cover, or those costs can be covered or at least shared with the medical aid providers. One thing that bugs me with medical aids, well, lots of things bugs me. They're complicated and messy. We get kind of distracted by insurance companies. So they sell us all these loyalty programs and they give you points and all of that. My view is you pay a hospital plan so that you're covered when you go to hospital.
Yeah.
Not so that you can go and shop there and do this and fly there. Those things are just a distraction. And even the savings plans that they give you as part of your medical aid, I don't really like. When they're charging you on your premium and then they say this is going to go into your savings account, that's your money that they're using actually for their benefit. And then they make it difficult for you to use it and they create all sorts of rules. So I love the idea of getting a very simple hospital plan, saving some extra money every month into your own medical hospital savings fund or whatever, and then using it for expenses. And if you can create your own fund to cover your dentistry and your glasses and the like. So I think early days, a hospital plan's great. Later in life, upgrade for more comprehensive risk insurance there, because that's really what we're talking about is, if you end up in hospital for a few days or something like that, or you need some extra care at home, it might be that a more comprehensive medical aid is helpful there. And then when you've got kids, they're expensive medically. So I think just getting that cover as well makes sense.
Yeah. And it's again the trade-off between what is your level of risk. If you are very young, healthy, fit as an ox, then hospital plan will be fine. I can maybe add to that some gap cover is also usually a good idea. What that means is, let's say you hospitalized and you have to go for surgery. The surgeon or the anesthetist can charge up from 100% rates to 500% rates. And if they decide to charge 500% rates, but your medical aid or hospital plan only cover 100%, then you're liable for that difference. That can also get quite pricey. So adding gap cover to a hospital plan or medical aid is usually also a good idea if you can afford it. And absolutely, yeah. It's having a medical savings plan is usually, in my opinion, also better because you've got control over that. It's not locked into certain T's and C's that you can use it for not. And I absolutely agree with all the bells and whistles that some of these companies would sell you. It's kind of like, if you're going to pay this much for medical cover, make sure you pay that for the cover. You don't pay this much to get a cheaper discount to the gym or to get a smoothie at Y once a month, or to get the latest iPhone. Don't fall for those tricks or become persuaded by them, because you're never going to win. in these kind of games. It's always sounds like you're going to win, but you don't. You still pay for it some way or another. You may just not know how. So keep it simple, and also make sure that it's covered for your needs. And as your life progresses and your family expands, definitely I think absolutely if you start having kids, then a more comprehensive medical aid would be advisable. That hopefully at that point in your career, you also progressed and your funds are more available at that point in time.
Maybe just one thing, when you do your shopping around, because you absolutely should shop around for a medical aid as well. Just because everyone's on plan A doesn't mean that there is a plan B, C, D that could also work for you and maybe even be cheaper. There are some times when being part of a bigger group helps you. In other words, if you work for a bank, you might find that there is a specialist medical aid for bank employees. And you know, if you work for government, there is definitely one. It's called GEMS. And the same could apply to specialists or accountants, etc. And the work, I used to run polls online in the financial services industry, asking people what are the best medical aids, and often the best medical aids were those specialists groups. So just, you know, if you are you are in a position where you work in a specialist industry that has a specialist medical aid, that might be your best in terms of bang for buck. So just be aware of that. Don't just do what all your friends are doing, because there might not be someone who's a specialist that can actually get into that the same medical aid that you can. And if that specialist medical aid doesn't pay for all your other stuff, but it's a great medical aid, that's a good sign.
Yeah, and sometimes your employer would offer that benefit. They'll say, like, you know, we can subsidize your contribution to a medical aid, which is a great thing to have and an important benefit to take into account, because that can really help your finances. I see we're running a bit out of time on this episode, so we've covered short-term insurance and medical aid today. I think in the next episode we'll talk a bit about long-term insurance. This is now your income protection, disability, life cover. Very important, but also quite intricate and a bit complicated for most people to understand. So we're going to dig our nails into that in the next episode. But for today, thank you so much for watching. We also want to give a shout out to our sponsor, Sealand, for the new kits that we have. Thank you so much for that. And
I'm looking forward to the next episode. I must say, I find life assurance and disability insurance complicated. So looking forward to that. I agree. Thank you, Sealand. It makes me look as fashionable as possible. It's a hard job, but I appreciate the help. Thank you for watching and listening. Don't forget to subscribe, and we'll catch you on the other side.
The Honest Money podcast is brought to you by Prescient Investment Management. We consider everything to give you the advantage. It's the future of investing. Prescient Investment Management is an authorized FSP.